Enigma principles. So wired into the mind of Enigma. So what's going on here is like the more advanced understanding of what is going on in the markets and really dig into the reasons of what's going on inside the price delivery. So as you learned already in week one, actually, the market is highly driven and engineered to give people all these reasons and obviously show those reasons as well in terms of technical analysis, even smart money traps, or like technically smart money concepts overall. If you have to think, you have to really get into the belief system of like everyone, every system, every trader, every algo, everything needs to be engineered into the market all the time. There is no rest. So what you've seen here is just the heart of Enigma. It has all these reasons, these principles of what it has to do constantly without a break, 24/5, like always in the week it is closed on Forex market, right? So what they have to do without even resting for just a minute, right? They have to deliver price action the most efficiently and engineer the liquidity and build it up, take it out, get to their targets, mitigate, fill imbalances, quote unquote, fill deliver price. It's all this never ending cycle. So if you think about it, it's the most complex and complicated system ever. It's the biggest market in the whole world by a fucking landslide. I think the whole entire stock market value is like less than 1 day in the Forex market. Just think about how crazy the Forex market is. And obviously every pair, every price action has to be delivered and obviously fairly delivered with rules. They can't do random stuff. They have to be aware of what people do, what they do inside the markets, what happens when they print specific price patterns or price behaviors. Everyone obviously monitors the charts and there's billions and trillions of dollars involved, right? So it has to be the most efficient engineering process ever. And there's these 6 major principles of Enigma, which it always have to keep in mind when price is delivered, right? So to dig into it, the first principle is the who. The who is always sellers or buyers. There's no more, right? It's sellers and buyers. So the who just of the Enigma has, okay, if Enigma does anything, it will bring sellers in or it will bring buyers in. Some buyers might take profit. Some sellers might have a stop loss, right? What happens when they take out a specific zone? They understand exactly. Again, we talked about it in week 1 in great detail. They know all the reasons, the psychology reasons, the fundamental reasons, the technical reasons, right? They know all the emotional reasons, everything in combination. What happens when they show specific thing? Again, candlestick patterns, traders jump in, trend traders jump in, reversal traders jump in, breakout traders jump in, smart money traders jump in, supply demand traders jump in, like indicators fire, automated systems fire, Fibonacci, whatever indicators in terms of like EMAs, like everything is engineered non-stop. So every price movement brings either sellers in or buyers. That's the who. So always ask yourself as well, okay, who is getting taken in the market right now and who's getting taken out? Is it the buyers or the sellers? Like if you look at a trending market, it should be not too hard to see where the liquidity is. It's majority of sellers in a downtrend, right? But guess what? In a sideways trend, you also have to identify those reasons. Same thing when potential reversals happen and when they fake these reversals, aka these Kochs, whatever, these false break of structures, right? It's all engineered. You have to ask those questions. What happens to the sellers and the buyers? And most important, where the sellers and buyers have their stop losses of these zones. The next thing is the what. The what is always what strategy exactly is targeted right now. Obviously, if you have a huge quadruple top somewhere and then this zone gets taken out, what happens to them? Obviously, breakout traders jump in like crazy. But even the triple top by itself, like if you see this, what is this? The reason is support and resistance traders see a huge resistance area, so they taking the short. So the moment this happens, they see a new, what? Break of structure, continue lower, whatever, right? So this brings in sellers, first of all, with these reasons, and then with these reasons, right? The other way is, for example, if you have then something like this. So maybe trend traders, whatever, horrible drawing, but you know what I mean, right? They're getting maybe the third touch of the trend line, right? So this also brings in sellers even more, right? Then we understand now the inducement of these liquidity zones, right? So guess what will happen? Boom, right? So sellers getting taken out. Also, this trend line is getting taken out. But guess what? Now these breakout traders go in because of, first of all, they have to break out of the trend line. I think a trade's gonna reverse, right? With speed, momentum, right? That all these resistance or support, or in this case, resistance, traders get taken out of the quadruple top in here as well, the false Koch in here as well, and then obviously they're ready to go, right? So, but first they have to engineer all these reasons in, and you have to just identify what strategies are getting targeted right now. Same thing with smart money concepts. Again, if there's a very obvious imbalance zone with whatever point of interest, chances are very high that the smart money concept's getting induced there. And they're just getting a reaction and then obviously getting taken out as well, get liquidated. So that's why you have to identify all these different what reasons in terms of what is it? Is it a breakout strategy? Is it a trendline strategy? Is it a smart money concept? Is it support resistance? Is it overall market structure who gets induced? But what exactly is getting induced? And then again, the who in what direction? Okay, breakout good, but breakout in what directions? Okay, breakout brings in the buyers in this scenario, but maybe also sellers in these other scenarios, right? In terms of the trend line in here. So you have to always constantly think exactly how Enigma does it. It balances the liquidity, builds it up. It knows exactly if Enigma obviously delivers this price action in here, they know, okay, they're just loading the bandwidth or the boat with sellers, right? And they know exactly if they do this again, okay, now there's more sellers and so on and so forth. And they know exactly if they now do this, this first of all brings buyers in a little bit, but the moment they do this, it brings in more sellers, right? So that's obviously why they can now induce them. It's always this engineering of the who and the what in terms of what strategy is targeted at the moment. So you have to also know that for yourself in terms to have an understanding about market intentions. The next thing is the where. That's also a very, very important aspect to see the overall bigger picture. The where just means, for example, it is in Asia range. Okay, so if you have the Asia range in here, for example, right, building up, and now you're having, for example, Asia midline in here, and they're doing something like this, inducing low one more time, right? And then you have an understanding, okay, it's Asia midline liquidity. It's a very valid zone. They're having a build up, getting induced to low side. Yes, there's double bottoms or even triple bottoms in Asia low. But first, now you have this cycle in here. Maybe they induce high first to take out all these breakout traders off here. And then for maybe come with an Asia whipsaw to take out this liquidity. Same thing then. If there's an Asia whipsaw, right, now the liquidity has been taken here. So you expect something like this. And guess what? All the retailers are stopped out because they don't really have a reason. But first they got their reason to take in the buyers in here with the momentum and speed of the breakout, the sellers in here with the breakout, right, with the speed, and also the sideways thing and baby breakout traders in here. But it's all engineered with its purpose. Another very important thing is the before, like the location in terms of, for example, of the time frame, right? Waffling like crazy, right? So the time frame always the same thing. If you have a 1 minute build up, it will not be as significant if you have a 1 hour build up, right? So if you have a, for example, same thing as always, easy one right in here. This is the 1 hour, right? And you have this price point in here. This is your 1 hour inducement. Okay, and if you zoom in here now, if you still have the same scenario, okay, building up and then inducing high, tapping into here, that's a much more valid play because you're combining the location. Okay, it's this price behavior is inside this 1 hour overall picture. And of course, it will finish the 1 hour picture. And then inside that, again, the market is highly fractal. It has to do everything at all time frames all the time, right? And then obviously do the specific things in specific locations. And if you combine it at a 1 hour and then just do the same thing at the 5 minute or 1 minute, same thing in the 5 minute. If you have a 5 minute price behavior, break it down into the M1 to spot the where again. Okay, this 1 minute price behavior is where in my 5 minute inducement of Asia low, for example. Perfect. So now you have the location of the 1 minute, and then you have to check where's the M5 location. Same thing. If you have Asia range in here in the M5, right? Perfect. Let's say normal London cup trade to easily clarify the situation. Boom. And if you have this now, right, then you can say, okay, where is this in the overall picture? Then you have to look at the 1 hour to see what's going on to the left. Maybe you had here the equal highs, and this itself was an inducement up here. So out of a sudden, you know, okay, the location, the where, this in here, my cup trade scenario of the M5 is in my 1 hour price behavior, right? Then you do the same thing. Okay, boom. You zoom into here. Okay, now I have, for example, this price action in here, right? Boom. Relevant break of structure into mitigation, but this is my M1. So it's always the where, but where does this happen? If you just look at this at the M1 randomly, you will get smoked because this fake break of structures, they're everywhere. But the moment you check the location, okay, I'm in the M5 valid cup trade scenario, and my M5 is in a 1 hour valid mitigation zone. Boom. Out of a sudden, the where becomes very important, right? Or if it happens near double bottom, for example. Or like overall, where is it? Is it above or below a liquidity zone? Is it in Asia midline, for example? Right? Am I at a weekly high, for example? And so on and so forth. Always identify the where on top of the what. What are they showing? What are they building? What is going on? What are they creating? And who is getting induced with these strategies? And where it all happens. Okay, the next thing is the when. And the when, of course, is majority used on the M5, is the time in terms of session. Is it Frankfurt Open before London Open? So again, same thing. Let's take the easiest example again. We have our Asia range. We now have our fast and functorious scenario. Maybe you have something like this. Again, build up. Here's also liquidity zone, right? So let's say boom, induced also this liquidity zones. In this case, maybe they open prices here, right? Right below this equal lows in here as well. Frankfurt to the minute. But guess what? We're also right before London open time. So guess what? Frankfurt does its purpose, brings in liquidity, takes out the people who are going to induce here and here. Where of the location again? Where is it going on? Okay, they open price maybe, right? And then also taking out liquidity to the minute timing right before London Open. So now you know you should not hold this trade until hitting the fences, right? No, London Open is right around here. It could be your cup trade scenario. Same thing as always. Look to the left. Do you have a medium inducement? Do you have maybe a valid mitigation above that? Do you have your smart money trap into mitigation in London Open? And then same thing, break it down to the M1 or wait for what? In terms of like this, relevant break of structures, boom, M1 scenarios here, let entry, EDM, always the same scenarios. But the when is very important, of course, you know it already. Use timing as a compass and also look at the duration. How long do they do what they're already doing? If you have like this, right, for the last 2 or 3 or 4, or maybe even the whole day, they're building up this liquidity, and out of a sudden, and like maybe London Open is in here, right? And out of a sudden, whoosh, vector candle in New York trap. So they build literally liquidity for the whole day, and now all of a sudden they take it out to the high side of New York trap. You can, of course, expect a longer move down. for also duration, but vice versa, right? If we have, for example, this, but this is only going on for, like, let's say this is the M1 and this is a range of overall 10 minutes, you should not expect this after. If you expect this whole price behavior, you need something like this before, like duration equals duration as well, right? Again, if this is going on for 10 minutes, you should not expect a 5-hour move coming out of it. But you have before a 5-hour build-up, then you can also expect a 5-hour reaction out of it, right? So use the duration also for knowing when and how long you can hold the trading opportunities, right? Again, if the whole Asia range is building up for the whole day and it's all in the right range, out of a sudden it's getting broken, guess what? They will spend a lot of time trading away from that. Same thing. So look at the duration, how long does it take, and then when does the trap move happen? When is the, whatever how you want to call it, the knockout blow of taking out the liquidity, bringing people in with momentum and the opposite direction, right? And then taking them out, obviously, after. But duration and time, okay? That is the when. The why is the reasons, the emotions, and intentions. So again, we have to understand buyers or sellers, what strategies are getting targeted right now. Well, most of the times it's like a lot of strategies at once. It has to be like that. Where does it happen? Okay, it happens right in London, in the Asia midline, for example, then right at Frankfurt Open. Why is this going to happen? Obviously, that's the true intentions. Obviously, if it does with vector candles, for example, that creates FOMO. The same thing why the fast-moving 2S trades work so well in the one direction is because it's usually a fast move. Always keep in mind these FOMO and momentum traps. That's always like a very good indication, the easiest way to spot emotions. If you, again, put yourself back into your own trading situation. How many times you think, oh my God, now the market goes, oh my God, look at this crazy candle. And now put yourself into the situation of a breakout trader. If they see a huge vector candle that took out like a quadruple top, they're obviously getting FOMO. Same thing with this intentions. Again, Kochs are huge in terms of directional switch, right? That's why they're getting targeted so many times, because how many reasons are there for a reversal? Most of the reasons of people have in terms of reversal is these Kochs, these fake market structure breaks, right? So that's why they absolutely love to fake this Kochs in here then to just go higher, right? Because that again shows for most of people a directional change, and that creates a smart money trap. That's why this obviously gives a reaction in here, right? Because again, they're getting induced with the directional shift, they're getting their mitigation, they're getting their reaction, they're loading up the boat just to get smoked, right? That's also market intentions. You have to learn that. You will see that all the time, that they fake the Koch before the real move, give the false reaction, then take them out, and then obviously this is majority of the time in perfect time window. And once all the intentions are done, smart money traders getting the L as well, then the market is ready to reverse. So also check the why they doing things before, right? Again, momentum and vector is a big one. Kochs is also an easy one to spot. The whys of why are they doing things. Okay, again, also think in terms of pip count, in terms of how much money is needed to move the market in whatever an engineered direction. And obviously for them to move the market like this, it doesn't cost that much, right? Because obviously there's a line with retailers support them, right? Or overall strategies support them. But the moment they have to make a structural break, that costs them a lot of money, because they have to drive market below that. Obviously, that's expensive. So guess what? Build up, getting induced to low side, structures getting induced to low side. Everyone's jumping in the reversal. Obviously, we know that's inducement low of the build up, faking the Koch. Boom, wait for the knockout blow. And then obviously, depending on where you are in here, look to the left. But then technically this continuation cycle is done. Same thing. Wait for what? Confirmations. and so on and so forth, right? But then obviously always keep the why in mind also. And if you do this, if you just, again, look at the who, look at the what, look at the where, the when, and the why, it will limit your reasons a lot to maybe take a trade or no. Because if you really think into all those scenarios, you really think before you're taking a trade. Okay? So make more reasons for yourself and less reasons to obviously make shit up, because if you just follow that intentions of the Enigma, it should become very clearer. And the last thing is then the how. And that is technically the retail strategy confirmations of what do they show before all that stuff, right? Again, do they show the equal high? Do they show the third touch of a trend line? Do they show the false reaction of a smart money trap? Is it now a breakout? That's all the hows, which again gives you the last confirmation. Okay, all the intentions are done. We have the buyers, for example, having their breakout in terms of like huge, like first of all, obviously the when, the where, the why, and the how have to wait, right? So we have to first see the who and the what, then the where does it happen? Okay, it happens now in, for example, Asia range, right? Right before London Open, for example. And now we're creating this equal highs in Asia range, right? Now we're at Asia midline in here. If this is my Asia range, right? Whatever, you know what I mean. This is your Asia midline. Like we have a PY in here. Now momentum and speed. The when, obviously, okay, Frankfurt Open to the absolute minute, right? The why of they doing things. Again, maybe they're faking the Koch in here. Again, we have a triple top in here. Okay, the why is they're faking the directional shift, right? To make people believe the market is turning, right? Then the speed, maybe there's a vector candle into the Asia midline reaction. And then, of course, the how they're doing things, right? So they had these equal lows in here, maybe. Oops, they have the equal lows in here, right? Then how do they do it? Of course, maybe they had this triple tops in here and so on and so forth. Also have all these things in mind and then trade out of there, and then the whole overall cycle continues again. Think about what happens now to buyers, what happens to the what. Okay, now we have a final breakout through the, if they do something like this, okay, that's a break and retest for them. So there's even more people getting into the long side, but on the outer side, right, we have the triple top getting broken. Breakout traders having the bias here, they're getting taken out at break even here. So it's this constant what happens to people over and over and over again. So if you have those things in mind all the time, combined with the where are you? Okay, so here we look to the left. Where are we? Okay, are we in a 1 hour mitigation zone? Do we have imbalances here which all get filled, for example? Did we have a smart money trap in here which got reacted from here? Do we have a valid mitigation zone in here? Right, perfect. That's our where. When, okay, now we're in perfect London Open time window. The why, what's going on? Okay, they faked the Koch in here maybe earlier for the smart money trap reaction. And the how, yes, now we have finally the retail strategies confirmations. Everything is done. Now they're having the new trend up, build up in here. They obviously have the third touch of the trend line in here, right? The breakout happened. Yes, perfect. The false reaction of the smart money trap happened, and we have vector candles of speed. It's also the why. Can also technically go into the how, right? Also line these things up, and then obviously think about the next logical move for the Enigma to deliver price action in their favor and against everyone else, which is all the other strategies that exist. The moment you identify that, you will have a huge advantage, and you should go over all these questions before you even think about taking a trade.